business in general, capitalism in general, is making life better, but it's certain institutions, of which big business is one of them, that has eroded the confidence of consumers out there.
Fantastic episode for you this week, back on the topic of economics with Hunter Hastings. Hunter is a venture capitalist, an educator, and the co-author of the book Aberrant Capitalism. In this conversation, he lays out the history of capitalism from its roots in the Industrial Revolution in England right through to this present era of highly financialized institutions and all of the ills that go with a financialized economy. But he provides ultimately a message of hope as he describes this emergent form of doing business, digitally enabled, which puts much more of the decision making at the front line and is ultimately in service of the customer, this customer-focused, service-oriented form of capitalism, which now characterizes some of our most successful companies. Let's dive in. And we are live with another episode of Being Human. I'm delighted to say I'm here with Hunter Hastings. Hunter is a general partner at Biala Venture Partners. He's also a VP at the Kingman Institute, which he promised he would explain to me. He's an economist and he's an author of this book, Aberrant Capitalism, The Decay and Revival of Customer Capitalism. So it is with huge delight that I invite you, Hunter, to the show.
Well, thank you very much. It's a great pleasure and an honor. Good morning to you.
Good. Well, yes.
Maybe afternoon where you are.
Good afternoon for us. Good. Where are you in the world, Hunter?
I'm in San Diego, California.
Oh, beautiful. Wow. We've got something approaching California weather today. We've had for 2 days.
Oh,
so
good.
we all feel like we're in dreamland. We've had some stuff. Yes. So yeah, thank you very much. So you are an economist. You're an active, venture capitalist, and you're also VP at the Kingman Institute. Jess, just briefly explain that.
We're attempting to change business education and apply economics in a different way to business education. So, as maybe we'll be able to explain during this conversation, we think that business education has become a little bit distorted through the lens of the MBA. It's about business administration, as opposed to about serving customers and serving humans and human thriving, which you always talk about. So that's our nonprofit that's aiming to develop new forms of business education.
Oh, wonderful. Right. Well, there's an area that could use some reform.
We think so.
So that's awesome. Well, education in general, but maybe especially MBAs and business management education. So yeah, like with all my guests, I like to give people a grounding in who you are and your origins and some of the context for you taking the interests that you now have. So yeah, where did it start for you, Hunter? Where did you grow up? Give us a little bit about your early life.
Yeah, thank you. It's a great joy to talk about that. I was born in your country, in England, in the northeastern part of England. And for people who don't know that, it's coal mining and iron ore and shipbuilding and steel mills and dirt and unemployment and all of those horrible things that sometimes happen in declining industrial areas. So I grew up there, not in poverty, but at the very lower end of the working class, if you like. My dad was a seaman. But we all believed in education as the way out. And I got a good education there at institution they called grammar schools back then, which I'm not sure still exists. But
we've got a few, but yeah, they're a rare sight these days, a grammar school.
They were public in the English sense of public, available to everyone, but they focused on quality of education and trying to get kids to college. So I was lucky to do that, and I went to college in your hometown in Cambridge,
right?
Which was they were trying to open up their doors. Then had a reputation for being somewhat elitist, and they were trying to open their doors to more kids like myself from the working class. So I studied economics there, and then that began a lifelong interest in economics, but it was the wrong form of economics. It was Keynesianism and socialist economics. So I've spent a lot of time unlearning that over time. And I joined an American company, Procter and Gamble, that had a local office close by in Newcastle upon Tyne. And then that led to various positions in different countries, including the U.S. And that Procter and Gamble developed a very interesting form of thinking about business, which was very much customer first. The boss was the customer, and you learned about that, and that becomes a mental process. I'm trying to please customers. I'm trying to improve their lives. It's a noble activity for business, what I call in the book customer capitalism. And so that form of doing business becomes very beneficial, I think, for practitioners and for society. So that's been my professional track, has been marketing in that vein all over the world. I worked in global branding. So that's the idea of taking brands that maybe grew up in a individual country and trying to make them applicable for customers all over the world. And then at the end of my career, I ended up in venture capital, seed stage venture capital, which is starting small businesses. They've got a business model, but they haven't grown yet. And that's been a fascinating area. So business has been good to me.
Right. And so you spent your whole corporate career at Procter and Gamble, and
no. Sorry if I misled you there. What happens is Procter and Gamble is known for that special kind of thinking, and therefore that becomes a kind of resellable way of thinking. So I was in the consulting industry for a long time,
I see.
and I ultimately started a consulting company and that did the global branding that we talked about. So we were trying to market brands in Moscow and Tel Aviv and Tokyo and Shanghai and Argentina, and that was a fascinating period.
Right. And as part of that, you were helping these businesses orient towards the customer as part of you helping them to market, or were you just doing the marketing?
No, it was both of those things. So marketing is the whole of business. Peter Drucker said there's two productive activities of business. One is marketing and one is innovation. So I was in the marketing part of that. And we had a formula for global brands, which we called fixed and flexible. There are certain things that are fixed. You don't change the brand name, you don't change certain elements of the value proposition. But there are certain things that are flexible for the individual countries. So you've got to understand those customers, understand culture, understand markets, understand channels. And then you bring those two fixed and flexible parts together to develop the right value proposition for that particular country. And some things work in some places and don't work in others. So you've got to make those adjustments. It's a fascinating business.
Right. And coming to the book, Aberrant Capitalism, when did you start to get interested in the sort of the broader sweep of the evolution of capitalism and the historical question? When did you start to take this interest and start to develop your thoughts and your sort of analysis on capitalism as a trend over time?
Yeah, there are two parts to that, I think. One is that the view through economics, which is economics went mathematical and top-down planning. So it focuses in people's minds on GDP and money supply and the level of employment in the total economy and those kinds of things. Very much aggregates and very much a top-down way of thinking. We can plan the economy, and there's an opposite set of thinking in economics from that, which is bottom up. That economics is about human thriving. It's about people making choices that improve their lives. It's about how they interact in those kinds of markets. Adam Smith is one of my favorite economists because he got it right way back in 1776, understanding that bottom up kind of capitalism. And so that was an interest over time. I was a big fan of Margaret Thatcher when I was still in the UK, and I don't know whether that's controversial, but she was a supporter of what came out of an economist called F.A. Hayek. And Hayek was a, quote, Austrian economist. They call him that because a lot of the original work was done in Vienna, which at the end of the 19th century was the center of the universe. It was the intellectual center of the universe, if you like, where all the great thinking came from. But anyway, Hayek was all about bottom up. He had a concept called spontaneous order. We're all interacting, we're all making our own decisions, and somehow the market works it out for the benefit of everybody. But you can't plan that. You can't make rules about it. You just let the market conduct itself. And so that's one stream of thinking. And then the other stream of thinking was that capitalism is coming under a lot of criticism, especially from young people. There was a recent poll in the Pew Center that said that only 40% of young people, 18 to 29-year-olds, had a positive view of capitalism, and more of them had a positive view of socialism. And that doesn't make any sense because capitalism is the economic system that has raised standards of living and quality of life and all of the measures of longevity and education and so on that we prize. It's raised them all over the world for hundreds of years. So why are people criticizing capitalism? And then Cambridge University Press had this series, they call it Reinventing Capitalism, which I think is a little bit overblown. We don't want to reinvent it, but kind of looking at it from a critical or reformist kind of point of view. And so I've been involved in a lot of thinking about management systems. And so all of those intersected in looking at capitalism across a broad spectrum. What I think becomes the case is the young people are not critical of capitalism. They're critical of corporations. And corporations are, in fact, guilty of some bad behavior. And so we looked at capitalism from about the middle of the 19th century, which is when in the US, the great corporations started to develop. In fact, it was from changes in laws in Britain and British Parliament that created the limited liability corporation, where investors wouldn't be sent to bankruptcy prison if their investments failed, which used to be the case. They were just limited to the amount of money that they'd invested. So that unleashed these great corporations, who actually started earlier, if you recall from the book, with a British company, Wedgwood.
Yeah. Oh, yeah. Yeah. An example of entrepreneurialism.
Yeah, exactly.
Entrepreneurial capitalism, right?
Fabulous company, but it could never scale, could never get big. And these limited liability corporations solved that problem. So then in the US especially, we started seeing the railroads and the steel mills and the giant factories. We had what we call mass production, mass distribution, and mass marketing. And so the benefits of all these new technologies, the steam engine and communications and all kinds of other technologies, were brought to more and more people, improving their lives in dramatic ways. One of the examples I like a lot is Standard Oil, which is John D. Rockefeller. And everybody criticizes him as one of the robber barons. But if you think of what he did, he took kerosene, a derivative of oil, made it available for affordable illumination so that people in their houses out in the Midwest, after working hard in the fields or whatever they did, could have illumination at home to be with the kids, to help them learn, to read books, to maybe work in the barn, whatever it might be. And the price of that came down by thousands of percentage points over Rockefeller's time. Candles are very expensive. Candles were things that only the elite had. So Rockefeller brought this affordable illumination with all its benefits. And there are all kinds of other things. There was Sears and Roebuck, which is pretty famous over here. I'm not sure it is in the UK, but they brought catalog marketing to everybody in America. You could order farm equipment or furniture or clothing or whatever it might be. So just benefiting people, improving lives across a vast population. So that was why we called it customer capitalism. The customer got all the benefit. And then what happened over time as we track is the entrepreneurs, which you've mentioned, like Rockefeller and like Wedgwood, left. They left the companies and management took over. And the objectives of management are not always the same as the objectives of the customers or the investors. They're looking for structure and power and predictability and control and those kinds of things. One of the very famous names in that early period of management is Frederick Taylor. And he was the one who got into time and motion studies. If you're working at a lathe or you're working in pig iron, I'm going to time exactly what time it takes for you to do your job, and then I'm going to make that the standard. You've got to keep to that, and you can't take breaks, and you can't leave. We've got to be efficient. So that kind of what we call control managerialism took over, and then over time, that system became embedded in management. One of the big developments was in both of the big world wars, the 1914 war and 1939 to 44 war, World War II, where government took over that and said, hey, we've got to build airplanes, we've got to build ships. So we're going to take this command and control structure, and they can do it with more power than private companies can. So that became a new standard. And then after the Second World War, the same people who were running those war boards and those plane building projects went back into private industry. And so it became the GEs and the IBMs with their strategic planning units. There's a great piece in the book about GE, about how many planning units they had, how many strategic plans, and they rolled all of those up to the top, and then they added more strategic planners. There were more planners than executors, and it all eventually flopped because it was so detached and so formal from the marketplace.
But why did that development occur, and were there any benefits to that style over the entrepreneurial style?
Well, yeah, for two reasons, I think. One, those war economies were really important in development. So you think of those actions are very, very narrow. We just want to make uniforms. We just want to make planes. Just want to make ammunition. It's not an economy. It's just a very, very focused set of industrial production. So that idea of control and speed, and they eliminated the pricing system. So that was all about government procurement. So it just became a control orientation. Now, was there benefit? Well, in the long term, no. In the short term, it's hard to disentangle. The period after World War II was very, very economically positive in the U.S. The companies were growing. They were profitable, but they didn't last. They didn't have durability. So you'd say in the long term, no, there's no benefit from that control.
But in the short term, they were able to focus on very efficiently making a narrow set of products. Is that something that that system allowed for?
Which is not about thriving, obviously. It's about war, and it's not for customers. The customers didn't necessarily want airplanes to be built. They'd rather have food, clothing, and television sets.
Right. But then, and that's so there was this long period of managerial capitalism, or command, and then which then evolved into command and control, a sort of an even stricter version of that, and then we get financialization, right?
Yeah. So this happened in the late 20th century. That the stockholders started to focus more and more on their own rewards. The financial sector started to get bigger and bigger. And the financial sector is not trying to improve people's lives, it's trying to make money for a very narrow group of people. One of the studies that we quote in the book is from the Bank of International Settlements, which says that as the financial sector gets bigger, the productive sector gets smaller and less productive and less efficient. And some of that's talent. All the kids come out of Cambridge University and they go want to work for Goldman Sachs and not for Procter and Gamble anymore. But some of it is just making money with money as opposed to making money with creative production for the benefit of customers. And so they developed more and more products to trade. They rewarded investors and stockholders at a greater rate than they rewarded managers. So then the managers started to award themselves stock options, so that when they're giving out dividends and especially stock buybacks, that's for the benefit of the stockholders and now a small group of managers who are also stockholders. So it's insider dealing.
Just explain the stock buyback mechanism, for people who may be unfamiliar with that.
Yeah, I'm sorry. So what has started to happen recently is that companies will declare a buyback of the stock. The company will buy stock that's owned by independent stockholders, and they'll buy it back into the company treasury. And this became legalized by the SEC in the United States as a legitimate financial action. It doesn't have to be announced in advance. They can day trade to their own benefit. So the company will declare that they're going to buy back stock. There's two benefits for them. If the stock is $30 in the market, they can declare they'll buy it back at 31, and so it benefits all the holders. And then as a manager, I've been given a stock award, either a straight out award or an option that I might cash in the future, and so my reward goes up. So it's companies, they issue stock, it's in the marketplace, and they buy it back at a higher price. It's kind of the opposite of what they should be doing, and it's very pervasive. And one of the sets of data indicates that.
Just to be clear, why exactly does that benefit me? So I get so that I see the stockholder. If the stock is out there, if I'm holding a stock and I paid $30 for it, and now company comes along and buys it from me at $31, and now the company itself has its own stock that it now owns. Mm-hmm. How does that benefit me as the manager who authorized that purchase?
Because 2 years ago, you gave yourself a stock award as part of your bonus package. So there it is, just sitting, uncashed or unrealized at this point in time. And now you're guaranteed that piece of stock that you have unrealized on your personal balance sheet is going to be realized at $31 or $32. So you've turned that option into cash in an insider dealing kind of way.
I'm one of those stockholders that the company is buying the shares.
Right, exactly.
I get
Which may be the reason why the company is buying those shares. It's insidious.
Right. Yeah.
So we've seen that happen at the latter end of the 20th century, and there are examples of companies that have spent more than their net earnings in a given year on stock buybacks and dividends. So whatever profit they were making is more than used up in these stock buybacks and dividends for a narrow group of stockholders, and therefore it's not invested in R&D projects, your long-term uncertain exploration of future possibilities. So we would say that those stock buybacks are not for the benefit of customers. That's why customer capitalism has deteriorated into corporate capitalism.
Right. And
my phone is ringing, so I'm going to turn it off.
Oh, yeah, sure.
Sorry about that.
And this begs the question then, so how is it that so many of these corporations are successful as they are? They still dominate in many ways, and yet they're not spending significant portions of their income on R&D and innovation and so on.
Yeah, it's a long-term issue. So obviously, to be successful, they've developed a value proposition that has customers in the marketplace. People are buying. It's profitable, and you got to view capitalism in a dynamic sense. Profit is a signal from the marketplace that we're using society's resources in the best way. That society approves of that. Individual consumers approve of that. But that's dynamic. It changes over time. We've got innovation, the second most important thing that the corporation is doing, to constantly improve, to constantly get better. And the way we think of it in economics is that it's the customer who's the genius. The customer is always dissatisfied. The customer is always able to say, hey, I think there could be something better than this. I don't know what it is. I'm not the inventor, but I think my life could be even better. And so the innovators keep striving at doing that. If that R&D money and innovation money and experimentation money is all directed into stock buybacks and dividends and financial kinds of undertakings, then that future improvement is compromised. It's not, it's not black and white, it's a continuum. But over time, corporate capitalism is going to lead to the kind of sclerosis that we talk about in the book. Now, the good thing about capitalism, new companies will arise, new innovators will come along, and those corporations will suffer the benefit. Ultimately, the customer will do well, but there'll be interruptions, there'll be frictions, and that's what we're trying to review.
Mm. And coming back to your point about how the youth are don't have don't approve of capitalism, don't have a high opinion of capitalism. This is because, my inference here would be this is because the quality of life has reduced versus generations past. I saw a stat just today. Somebody was putting up about the affordability of housing, for example, the affordability of cars. So many things that were relatively easy for people to purchase 50, 60, 70 years ago are now out of reach for huge sections of the youth, right? And so my sense would be, well, they look at capitalism as then failing to allow them to have the lifestyles that perhaps their grandparents had, and to a lesser extent their parents had. And so do you make that link, first of all? And if you do you see it as being, yes, it's this corporate capitalism that's given rise to this degrading quality of life?
Yeah, I don't have the same concerns in that direction, perhaps that you have. I think that technology has improved our quality of life significantly. I think we got problems with infrastructure in cities. The quality of life in cities and the public transportation, that kind of thing, is an issue. Food is better, clothing is better. So I'm a little bit less concerned about that. I think our social institutions have eroded somewhat. But I think what the young people are objecting to is the kind of cold-heartedness that they see in corporations. So one of it is in employment. They view employment as a right, and it shouldn't be taken away from them. So when there are mergers and acquisitions, or industries close down, or companies have layoffs, I think they get very unhappy about that. I think, yeah, there's some affordability issues, but in economics, we always say there's substitution. If you can't afford X, you can always do Y, and if you're creative about it, that should be a good solution for everybody. So I think it's more about the social relations with the corporations and other institutions. And the other survey data, as you well know, about institutions is the young people have very little trust in institutions in general, whether that's parliament or big business or law and order. Interestingly enough, the numbers for what we call small business are very high, that they're very trusted. So it's the big business that is losing trust. And if you remember your Adam Smith, he talks about the butcher, the brewer, and the baker, and they're all trying to improve your life, improve your dinner. And so I think business in general, capitalism in general, is making life better, but it's certain institutions, of which big business is one of them, that that has eroded the confidence of consumers out there.
Right. And so it's and one of the ways you characterize it is a cold-heartedness.
Mm-hmm.
And so you think that this this financialization of the corporation creates a different moral environment? Does it lower empathy? How does it affect culture and the quality of the experience people have of those corporations?
Yes, it's a word that you've used from time to time, I think, is dehumanizing. So we go back to Frederick Taylor, and that was dehumanizing. I'm breaking down that working experience of the individual into time and motion studies, and all I'm interested in is the numbers. And then those command and control management structures, they're about moving people around on the chessboard and orders that they have to obey. And then in financialization, it all becomes numbers and dollars as opposed to people. And so I do think there's a dehumanizing trend in business because it's about abstract thinking, right? When you're putting a plan together, a strategic plan, you're not thinking about the individual who's doing customer service or delivering the goods or whatever it might be. So I think that's been the trend. The interesting point that we try to make in the book is that the latest kind of business model is a direct connection to the customer. So, you think about Amazon or you think about a Google search bar, there's a direct connection and information flows from that straight from the customer, straight from the individual to the corporation. And they can analyze that, they can act on that without necessarily all of these layers of bureaucracy and control. And so I think that's potentially promising. Now it's pretty mixed. It's one of the problems with those business models is they've spun off advertising as a revenue model. Now, advertising doesn't necessarily have the customer's benefit in mind. It's thinking of the customer as a target, as they call it, and a source of dollars. But there's the individuals making the choice in the end. So I think we can be hopeful about that. But the direct connection to the customer, that I can directly tell Amazon or M&S Online, if that's how they sell over there, what I like, what I prefer, when I've changed my mind, what my willingness to pay is, I can communicate that directly. And I think that consciousness that the customer and the firm are now directly connected without all these layers of management will point us in a much better direction in the future.
And do you see any evidence of that? First of all, from the employee's perspective, do you see evidence that employees of these, Amazon obviously is famously customer focused? Are employees of those highly customer focused firms, do they feel more fulfilled in their jobs? Do they feel more cared for? Is it a different experience?
Again, that evidence is mixed. They haven't got rid of all of the bureaucracies and one of my least favorite terms, human relations, doesn't really teach people as humans. It treats them as items on the balance sheet. But here's an interesting thing that's happening alongside this direct connection is a trend that's called self-management. I'm not sure that's exactly the way to think about it, but there's a great decentralization. The individuals and the teams most directly connected to the customer start to have the most power because they've got the data that's coming in from this direct connection. They can process that data, they can turn it into new initiatives and new innovations. And companies are beginning to recognize that running that all the way up the layers to the boardroom and then running it back down again is tremendously inefficient and often doesn't make good decisions. So we're starting to see this self-management where you don't need the layers of control. And those teams self-organize and they tend to be pretty happy. There's a concept that's also pretty new called flow. And you look at how a team produces an output through flow, through everybody interacting together and collaborating and certainly competing for ideas. And it's all contained within that team. And then there's interoperability with other teams, but it's very decentralized. And people like to work on those teams. They feel productive. They feel that there's meaning in what they do. So I think a lot of the trends are pointed in that direction. I don't think we're there yet. Obviously, there's a lot of dissatisfaction among traditional employee workforces. But the trends are all in the right direction.
Right. And would that tend to be applicable then only in the digital realm, where you can create these much closer relationships with the customer, or could you see that change in management style and culture pervading across all sectors?
I think it's a real sea change. I think this digital business model, the direct connection business model, is a massive change. I think what we're seeing is only going to happen in those kinds of digitally enabled kinds of businesses. So the challenge is to the other businesses: how can they take that model and apply it in their own industries? And so one of the famous case histories over here is a tomato processing company,
Yeah,
all things,
I've
called
had
Morning.
a couple of representatives on the show.
Okay, good. So Morningstar. So that that's not a digital business, is it? It's, they're growing tomatoes and crushing them, put them in cans. But they've created this kind of self-management attitude, which is the people closest to the customer are the ones with all the information, and therefore will defer to them. They can make their own decisions. That'll be passed into the production arena, and they'll be responsive to that. So it can be done in other industries. It's a big challenge. So that would say it's a mindset, not a technique or a method. It's a mindset about where I started out, thinking about the customer first and thinking about employees as people who happily serve customers. I think that's a mindset that could be adopted widely. But you've got to digitize the business. You've got to have that direct connection.
Right. And how do you respond to those who say, well, if your aim is really thriving, happy, fulfilled people in the workplace, then let's make their happiness primary, not the customer. So let's make it employee first. And then happy employees make for happy customers, right?
Yeah, so complex systems work in complex ways. I think we need both of those things. You need happy customers and happy employees, and the two are complementary. Um, if you think in a linear fashion, you would say that the customer comes first, and our employees are made happy by making other people's lives better. So that would be the linear version of that. The complex systems version would be, hey, it's all interacting together, and that both of those things are occurring at the same time. So I think I'm a systems thinker on that. Both go together. Don't try and separate them. If your life is about making customers' lives better, then you will have a happy life. That's a combination.
Right. Okay. Yeah. 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 Um, I was, I hesitated to say a version of happy wife, happy life. It's like happy
Yeah,
customer, happy life.
exactly. You can say that.
Yeah. Yeah. Great. Um, and like in terms of the economics here, is there evidence from your perspective that those adopting this type of mindset are um, economically advantaged by that?
Yes, yes, there's plenty of evidence of that. One of the problems with economics is that it's focused on numbers, and some of the numbers that are measured are not the ones that equate with customer satisfaction all the time. So we've got to learn how to improve our measurement. So if we can find ways, we call it creating value, if we can find ways of measuring that value, which is often in happiness and satisfaction and what we call the customer experience. So can we show that we've improved that? Yes. And if that's the case, what's the financial metric that reflects that? And we favor what we call economic value added, which is the stream of revenue that's coming from the assets that we deploy. And that stream of revenue is by definition from satisfied customers. They're buying what we're selling and they're willing to pay. And if that revenue stream is maintained over time, then you're maintaining the level of customer satisfaction and customer loyalty and so on. So we're learning how to measure that. I don't think what the stock market measures, like quarterly earnings and those kinds of things, is the right way, because that can be manipulated by accounting. But there are other measures. One of them is called cash flow ROI, which is another one of those convoluted terms, but it measures that economic value added. It measures the flow of value that's coming back from the customer to the firm, and then how much of that is reinvested in new assets for the future. So that problem we talked about of not reinvesting in R&D, cash flow ROI measures that, and over time, I mean long term, like 25 years, will show that the firm has both added new assets and increased its return on those assets. Amazon's a great example of that. When they first came into the marketplace, their ROIs were low because they were investing so much in their capital. Then the cash started to stream in, but then over time that benefit is eroded by competition, so they have to invest in new assets. But they've always been able to maintain a greater revenue flow than they're reinvesting. And so you'd say over time that cash flow ROI has got a lot of happy customers and the firm is resilient, it's able to grow. So we're looking for measures like that, I think, as opposed to quarterly profits and margins.
Right. But how do firms counter that pressure? Because if I'm a firm and I want to move to a flow style of management and distribute decision making and get closer to the customer and do all of those things, but I'm also needing to play the stock market game where all of the benefits of that go into buybacks and dividends and if it's all sort of eaten away and I don't get to reinvest it, how do I cope with that pressure, or how do I deal with it?
Well, it's a problem. You've identified it accurately. I think what is going to happen is that companies will develop a different relationship with stock markets. And remember, we tend to focus on over here the S&P 500 and sometimes the 7 big tech companies. It's a very narrow sliver of the population of firms over the whole market. 99% of firms are what we call small business. And they have a different relationship with financial markets. They either take venture capital, which is by definition patient. We're trying to figure out what's going to happen in the future as opposed to this quarter. And private equity, which has a bad reputation, but it's starting to change. It's starting to become patient capital in the same way. So I think that relationships with the stock market will change. It'll take time. It's obviously a well-entrenched institution, but that short-termism, that quarterly reporting, annual reporting, that has to give way. A longer-term point of view has to take place. Now, how that will happen, it may happen in, let's say, private equity. More and more companies are being funded by private equity these days. Or
that's an increasing. That was going to be a question I asked you. Actually, is there a trend of people moving away from the stock market and staying private, or never becoming public at all?
Yes, yeah, and the data says that at least half the economy is in private hands. It may be more than that, and it's increasing.
It is increasing.
So, yeah. Companies are delisting, as they call it, exiting from stock markets. New companies are not rushing to IPOs anymore. They're creating different kinds of capital relationships and capital structures. Private equity is becoming much more patient. So instead of the old image of private equity is we buy a distressed firm and then we rip the costs out of it and we resell it at a higher price. That was true in the past, but it's no longer true. They're creating piles of capital that are coming from pension funds and those kinds of institutions, which have much longer timelines. The wealth fund in Singapore is a 20-year timeline. That's what they're looking at for investment. The same with the PIF in Saudi Arabia. And a lot of pension funds in America, I'm not sure about the UK, are having that same kind of thinking. So you put the piles of capital into the market, put it to work for 20 years. That's what we're thinking. Let's build infrastructure. Let's build better education. Let's improve people's lives in long-term kinds of ways, as opposed to trading for liquidity on the stock market. So again, I think that's a long-term trend. I can't tell you it's going to change overnight, but those relationships with the financial sector are going to change dramatically.
Right. What about this other trend I saw, that the increasing proportion of the overall employed population work for non-profits rather than for profits? Is that something you've looked at and have a view on?
I haven't looked at it, but I don't have positive attitude towards nonprofits. Firstly, if you think about business, you should never have the word nonprofit. So profit is a positive signal from the marketplace, as we said, that society thinks you're using society's resources well. A nonprofit rejects that, and it used to be philanthropic, which is okay. You know, the industrialists started these nonprofits. We have the Ford Foundation and the Bill and Melinda Gates Foundation and stuff like that. So it's a way of recycling those profits into supposedly philanthropic activities. But so many of them have become lobbyists, and they've become lobbyists for anti-business causes. So yeah, they are growing. It's a growing sector, and young people seem to like working for them. But again, I don't have high hopes that they're going to improve capitalism in any direct way. I think they're kind of anti-capitalist. So um, I I don't think that sector will thrive.
Right. And you think there's society is more likely to gain from a if you like, a reformed capitalism than non-capitalistic approaches.
Yes, from an unburdened capitalism. Yes, exactly. So people come up through the economic tradition like I did. Again, starting with Adam Smith back in Scotland. Um, believe that the incentive system in capitalism, that if I'm an entrepreneur, my incentive is to produce something that pleases you, improves your life. You're willing to pay me for that. You pay me more than it costs me to make, so I've got money left over to reinvest or to use in other ways, and that's a positive cycle. It's a continuous positive cycle, and if left to do that, if there's no diversion into the financial sector or no diversion into corporate managerialism, if we can keep that cycle moving, then capitalism is good for everybody. It raises all the boats, and that's the evidence. It's the evidence of almost 300 years now of looking at GDP per capita as a proxy for a better life. It started in the UK, as everybody knows, in the Industrial Revolution, and all of a sudden, after thousands and thousands and thousands of years of not improving poverty, all of a sudden that curve shoots up and is continuing to shoot up, and not just in the UK, but everywhere in the world. So, yes, you'd have to say that capitalism, left to its natural way of operating, is good for everybody, best for everybody, and free markets are the solution.
And what about the critique that it turns us into hollowed out consumers who, are just living to sate our wants in the moment?
Well, I'm a believer in individualism. So your own personal meaning is where you find it and where you identify it. So people who talk like that, I think, have a very degraded view of individuals. Because they're intellectuals or they're somehow superior to the rest of us, they think we're not living meaningful lives because we're consuming. But people do what they want. People choose the way they choose. I don't take that kind of criticism. There's You've read Ludwig von Mises, and he has an interesting point of view. He said you can't criticize people because they choose detective novels over opera. It's what they prefer. Now you might think you're superior because you prefer opera, but don't criticize me because I like detective novels. So that was the 1930s way of saying the same thing. Let people choose what they want.
Right. Right. And do you think there's a need? So if if you like, if capitalism is the economic, the best possible economic paradigm or orientation, in terms of society as a whole, do we need balancing factors? Is that where do we get our spiritual nourishment? Because we're not just economic man, right? There are other facets of the human experience. Where do you see those other needs served? Is that something you've looked at?
Yeah, so that's, again, I think, kind of institutional view of the world that we live in and the environment around us. If you're an economist, if you are a committed economist, you say economics is everything. Economics is about how we make decisions, what we strive for. So if what I strive for is some kind of spirituality, then that's an economic good. There's a lot of spirituality out there in the marketplace to choose from. I could choose Zen Buddhism or I could choose the Church of England. But it's out there. If there's a demand for it, to put it in economic terms, there's certainly plenty of supply, and I get to choose. And if I don't like what I chose, I can go switch to something else. So if you're an economist, you look through that economic lens and say, the market will supply whatever it is that you want. So if you're looking for spirituality, there's plenty of it, whether it's on Amazon or in the church, or you go out in the desert and sit and meditate. There's plenty of choices for customers, and if that's how you find meaning in life, that's fine. It's all subjective. It's up to you.
Right. And so for you, this form of capitalism, this customer-centric capitalism, now of course enabled digitally, has the potential to transform society as a whole for the better in and of itself.
I think so, if it's unburdened. Now, one of the elements that we haven't talked about today, and it's tricky to talk about, is the role of government. And government doesn't think about capitalism in that same way. It thrives when people are dependent rather than creative. So when you create the welfare state and you create all the legislation to protect people, you're making them dependent on government, and that isn't sustainable either, I don't think. But it is certainly part of our Western model. But I think that if you let people strive, let people compete as both as producers and consumers, then everybody can win. It can raise all the boats. Now, there is undoubtedly, as a result of capitalism, an income gap and a wealth gap. It's just the way the system works. If the entrepreneurs succeed in developing something that improves the lives of many people in the market rewards them. It rewards them disproportionately because there's not that many of them. And so they get rich, they get wealthy, they get to be on the society pages, and people get envious. There's a lot of that in society. But for people who think like I do, there's just free capitalism up. Just let it be beneficial for everybody, and everybody will thrive as a result.
Right. And do you think that's the only way your sort of vision of this capitalism could occur, is in a basically libertarian society where it's all voluntary and there's no longer a centralized state?
I'm a big fan of that libertarian thinking. I don't think it's particularly practical in this day and age. So, systems carry their history on their back, is one of the expressions that the system scientists talk about. And we do have government. Government's got bigger and bigger. We do have other institutions. We do have nonprofits. So, the system has developed to where it sits today. Theoretically, I would say yes. If we decentralize, we let people self-manage and self-organize, then that's the best result for everybody. But I don't think it's practical. So we just have to figure out how to get the balance better than we have it today. And I do think as we look at artificial intelligence and this direct connection to the customer, the opportunities to do that, to decentralize and self-organize, are increasing. Economists don't predict anymore. We don't know what will happen as a result of that, but all of those trends are favorable.
Right, right. So you see their little that. Well, I'm interpreting what you're saying here as being an activist for libertarianism and doing away with the state is not where you're oriented. It's more about like, can we see more decentralization, more self-management across society, and focus on that directionally.
Right. And we know from economics that comes through experimentation. It comes through trying things. So you've got President Milei in Argentina, who has expressed the intent to move in that direction, to dismantle parts of the state, to take state-owned industries and sell them back to the private sector, to deregulate and delegislate in significant ways. We'll see how successful he is. I think another great success is in Singapore. It's been a very interesting case to follow. Lee Kuan Yew was educated at Oxford and took a lot of his education back to Singapore and has created a little city-state there, highly decentralized, that has really helped people thrive from an economic standpoint and continues to grow.
It's a remarkable story, isn't it? It has no natural resources, no farmland. I mean, it's and yet it's extraordinarily wealthy per capita, isn't it?
Yeah, it has people and freedom, and that's economic freedom, not political freedom. But it's a great case study. So there are lots of those going on around the world. Hong Kong used to be one, but now that experiment has been terminated. Lithuania and Estonia and Latvia have gone a little bit in that direction too. So these experiments will go on around the world, and some of them will succeed, and that's how we'll get to the next better step.
Right. And it's because I mean, I think that's often a theme on this show is how far can you go, like within the firm, in terms of implementing these ideas without the need for society at large to shift to accommodate how it is you want to operate. And so, I'm interested to, and of course, examples are thrown up like Haier in China, right? Which obviously is existing within the context of an authoritarian state, and yet highly decentralized, has implemented all of these ideas at scale, or not has it. I don't know if it's exactly your ideas, but they have decentralized massively. Yeah. They've got a lot of self-organization. They're doing it at scale. They're very successful, and it's within China. So how dependent do you think it is for a firm to be within a more, let's say, libertarian society in order to implement these changes?
Yeah, that's a very interesting case because politics and state control have been, to some extent, separated from economic thriving and economic growth. And the Chinese economists are beginning to understand that. They understand entrepreneurship better than we do, I think. Entrepreneurship is not just individuals with ideas, running experiments and eventually succeeding. It's a theme. It's the driving force behind growth and innovation. And the Chinese have understood this, and they've turned their entrepreneurs loose in the economy while limiting political freedoms at the CPP level. And there've been three waves of entrepreneurs in China. One is when they moved all the workers up out of the fields into the cities to drive city-based growth. They couldn't take all of them. Some of them were left behind. So they gave them the permission to start village level and town level enterprises. They didn't fund them very much, but they just said, hey, you can create your own companies and try and improve your life that way. And so this localized entrepreneurship grew up, and it was quite successful. Then there was a second period where, as some of the state-owned firms started to realize how inefficient they were, they let a number of people out of the state-owned firms and said, "You become entrepreneurs. We'll fund you. You start your own digital businesses, your own internet businesses, your online businesses, and those kinds of things." And then the third stream has been Chinese young people have gone to England or America or somewhere else to be educated and come back. Mm-hmm. So we've got this huge entrepreneurial wave in China, and it's raised living standards in China significantly. And they figured out how to do that inside this context of one-party state rule. And that's a model we have to look at and say, maybe they found a way to manage that mix. Now, one of the bad things that's happened in the digital world is we found the technology can track us and surveil us and do that kind of thing. In the West, we put that to use as advertising. And in China, they put that to use as social control. So, that's a bad development too. But I think you got to point to the Chinese way of raising their standard of living for people as entrepreneurially driven.
Right. So there's also, what I'll take there from your answer is that there is always a need for obviously, a level of enablement from governments, for what you're talking about to work. Yeah, you need a level of latitude within the society to.
Yeah, unleashing, I think, is, enabling sounds like they're powering it, but unleashing is more the way I think. Loosening the constraints so that the entrepreneurs can do better. Now, in Europe, you've got the opposite point of view. They want the government to be the entrepreneur. Mariana Mazzucati, who's she talks about state entrepreneurship. Hey, we've got all the money. We'll invest in this entrepreneurship, and we'll make the entrepreneurial rules. And that's not going to be able to work. You've got to unleash, not control.
Yeah. I see. Great. Well, this has been a fascinating conversation, Hunter. What do you, for the leaders or the managers listening out there, and they're, within their, organizations, and perhaps they recognize a lot of the themes we've talked about, the managerialism and the short-termism and so on. What are some of the things you think that an individual leader or a manager can start thinking about or doing to improve the value creation of their business and make the lives of their employees happier? Is that an unfair question, or do you have any response?
No, I think this idea of dismantling, of finding barriers and getting them out of the way. So we talk about this concept of flow. So one of the flows is the flow of information from the customer telling you what they prefer and what they like. How do we get that inside the firm? What are the barriers to that flowing to the marketing department or the innovation department or the production department or the customer service department? Get rid of all of those flows. Now, one of that would be layers, right? If you got layers of people that have to trade through that, is at least going to slow it up. Modern firms have a data layer that imports all of that data, processes it, and then lets all the different functions use it as they see fit. So these independent teams can use the data to improve their own performance. So I think it's looking for barriers, looking for anything that slows things down or gets in the way, anything that is top down versus bottom up, like planning and budget control and resource allocation. Try and find it a way to reverse that flow, to get it to bubble up. And just unleashing people. One of the interesting things about this self-management movement is they look at people's lives and they make these incredibly weighty decisions. You buy a house, you get married, you take on debt, you buy a car, you take a job. No one's managing how they do that, right? Each of us is making those decisions. And there's certain constraints in society about which choices you make and so on, but no one's managing us. So just understand that and let people, either individuals or on teams, self-manage, do it themselves. So what am I doing as a manager that's not letting them do that? And see if you can take that away. So I think the mindset of self-management, to the degree that you can apply it in the context and the structure of your own firm, is the right way to think. It's just reversal, decentralization, reversing the flow. It's turning your mindset from control to empowerment and unleashing.
Yeah, no, I love what you've said there. It reminds me, I don't know if you're familiar with David Marquette's book, Turn the Ship Around.
Mm-hmm. Yeah, a little bit.
A little bit, yeah. But one of the first things he does with his, and there's a famous example of him turning the performance of a submarine around from worst performing in the fleet to best performing in a year. And one of the first things he does, he just gets all the supervisor level officers on the submarine together and says, okay, where are all the places that you have to provide approvals that are just dumb? There's no need for you to be approving. And that's where he started, just taking out approval steps, right? Let's just take out approval steps.
Yeah.
But that echoes what you're saying there, right? Is just how do you remove remove obstacles and eliminate areas where you're just not treating people as being capable of making their own decision.
Right. And that very concept, supervisor, that's you can look at that and say, hey, there's something wrong here. Who needs supervising?
Right. Yeah. Well, fantastic. Well, is there anything we've not covered? Any major points that you would have liked to have looked at that we've not been through?
Well, I just plant a thought in people's minds about business education. That's one of the places that I've been focused on recently. So you talk about how do managers change their mindset. Well, they've come out of the business education, whether that's MBA or some other kind of business education, and they've been told that's how you manage, that's how you run companies. And so we're trying to look at ways where we can take some of these thoughts and embed them into business education. And one of them would be experiential learning. So instead of learning in a classroom, you take the old apprenticeship system, which I think was it may have been invented in the UK, where you do work in a real corporation and in a real project. Someone's watching you just to observe the data, but you're getting real time experience. And changing our business education into that alongside these kinds of principles of don't manage, unleash. So that's an area that people might think about. That how do we take our education system and help us in this direction that you and I are talking about?
Right, and presumably that's part of what you're doing with the Kingman Institute.
Yes, we're taking the kinds of economics that we discuss, so subjective value and entrepreneurship and those kinds of elements, and then trying to turn that into business education. So this concept of entrepreneurship is really, really important. And we've got it all wrong in our heads. We think of it as great individuals, and that's certainly part of it. There's some unique people out there, but it's a way of thinking, a way of doing business, a way of listening to the customer and then experimenting with the possible solutions to what the customer needs without all these other considerations of strategic planning and spreadsheet management and organization structures and so on. So that's our goal, to combine those sets of thoughts, the economic thought and the managerial thought.
Yeah, and I tell you what I love about that reframing is so often I think people, when they hear that word entrepreneur or entrepreneurship, they immediately think of the personality, the $1 billion, billionaire. And immediately they're like, well, I'm not that. I'm not Elon Musk. I'm not Mark Zuckerberg. So what's that got to do with me? Right. And I could never name your, famous entrepreneur. But yeah, I like what you're doing there with the reframing and have it not be about the individual, the personalities. It's just interestingly enough coming from an Austrian economist.
It's a way of thinking. That's the point we're trying to get across. And it's fraught with uncertainty. We all know that. We understand the risk in entrepreneurship, but the idea of experimentation and learning is a very positive one. We don't talk about failure in business. We talk about improvement. So the idea of the market is a selection process, and it selects those offerings which it finds the best. That you're, as an entrepreneur, you try to get selected, and that's a way of thinking.
Yeah, and it's almost like it's thinking about it in terms of the process and the approach, rather than what it produces, which is a small number of ultra wealthy people in every generation, right?
Exactly.
Yeah. Great. All right. Well, thank you so much, Hunter. We've got again. We'll put a link to the book Aberrant Capitalism, published by Cambridge University Press. Great to see Cambridge University Press there. So that's available. We'll put a link to that, and we'll put a link to the Kingman Institute, by Ella Venture Partners. Presumably, any budding startups there looking for some resource. Are you
They can
available?
they can find me on LinkedIn. I get a lot of contacts in that direction. Yeah.
Great. Anything else? Anywhere else, where you would send people who are interested in this conversation?
No, you can find me and some of our business education initiatives at a place called thevaluecreators.com. So if you could post that in your show notes, that would be very useful.
Valuecreators.com. Awesome. Well, fantastic. Thank you. Thanks again, Hunter. This has been
good. Well, thank you. Thanks for the invitation. Thanks for all you do.
Thank you.